Hey there everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, what a week it has been. So, since we spoke last Tuesday, the market decided to crash back off a little bit. As many of you probably already know the reasons why. It is all tied to the short squeeze that was playing out on Gamestop in the US. That's what triggered the selling. At the end of the day, the markets were probably a little bit overheated technically anyway, so they just needed a reason. We saw roughly, 4.5% pullback at its worst. We've rebounded most of that in the last couple of sessions, and now we're back to testing that key level of resistance through here at 67.60. That's the level, guys. We'll get back through there again. We're back on trend, and things are looking likely to keep going back up. I still sort of sit to my view that we're going to head back near those all-time highs within the first sort of quarter of this year. By the end of March, April, that's my prediction at this stage. But I really need these levels of resistance through here cleared. I thought I had that last week, but obviously with the GameStop scenario, which I'll talk about a bit more later, that's put a bit of uncertainty towards that prediction. But last 2 days, it's now making me feel a bit more optimistic again. But yeah, look, really looking for this 67.60 level to break. At this stage, US futures are up, and that's what we're pricing in today. If the momentum continues in the US, and it should continue here, and we'll just keep going. And what I do like is the US, there's still plenty of room to move back to all-time highs. What I wanted to see last night, which I didn't get, was that break of this little pennant here. But we're still on trend in the US. That trend hasn't broken yet, right? So let's see what tonight brings. A push through this little mini downtrend line here, or counter trend line here, I should say, will make me bullish again in the US, and therefore our market as well. So things are looking okay, right? They really are for the moment. So let's talk about what happened the last week. So this whole Reddit versus Wall Street. Many of you might have heard Wall Street Bets. It's a Reddit post that comes up regularly that they speculate on various different parts of the US market, options traders, that sort of thing. They usually go after fairly high risk types of trades. There's some experienced traders on there. There's a lot of inexperienced people on the social media space that do trade markets on advice from social media. We've seen that, but this time around this is something a little bit different. So what's happened is a group has seen that some hedge funds were heavily short GameStop, and to try and stuff them up, try and get them to lose some money, they decide to get out there and post around, let's buy GameStop to take on the big boys of Wall Street. And that's what they've done, okay? I'll quickly flick over to the chart. So it all started down here, okay, of a share price around $30–40, and they started a short squeeze, and it just becomes this it just became this absolute beast of buying. So it just triggers the first lot of buying off, and then you get a chain reaction. So anyone that is short, that can't meet their margin calls, if you're short stock, what that means, to close off your short position, you must buy it back on the market. So then you've got more competition on the buy side as all these shorters are trying to close off. So that's what sort of a definition. And this is an extreme example of one of those happening. If you actually take a measure here, the move from where it begun to probably at its worst was something maybe around sort of that 1300. So at its worst, the moves were something to 13 to 1400%, which is just phenomenal, right? It's crazy movement, guys. Look, you can take either side of this, really. I don't like anyone manipulating markets, okay, one way or the other, whether you're a billionaire or whether you've got $100 in your trading account. I don't like the market manipulation, right? I don't like seeing these sorts of situations play out, because always someone innocent gets hurt in between. And this is the thing, there's going to be a lot of people that are reading this on social media, buying GameStop up at these 300, 400, 200 levels when we know GameStop is likely to be worth $40 a share. So, we're not talking real value here. And we're seeing that across a lot of stocks in the markets too, by the way. Just look at the US tech sector and how overbought that is. And a lot of that is a lot of inexperienced people jumping in and buying, not knowing how to evaluate a company and whether they're worth what their share price says. There's just people blindlessly buying stocks because of COVID lockdowns and because they think, because we're in COVID lockdowns, tech companies should do well. Let's buy some more tech companies. Not looking and completely dismissing what their PE is and their future earnings growth potential. No one cares, right? But that'll all change at some point, right? Someone always gets hurt in these situations. We've seen it before. We still believe a move back to value is on the table this year. So keep an eye on those value stocks, guys, for you that know what a value stock is. If you don't, go get educated, guys. Get onto some education. If you do want to make consistent money from the market, there is better ways of doing it than getting your advice from social media. All right, that's my little 2 pieces on it. I do like the fact that we're sticking it to the big guy. Okay, I do like that as well. And like I said, I can sympathize on both sides, but I don't like it when anybody plays with the market in this manner. I just find that's it's not what we're about. Okay. All right, let's move on. We saw some positivity come from the RBA once again today. They have told us that interest rates basically are not moving anytime soon, guys. We're going to see record low interest rate levels here in Australia until at least 2024, where they're predicting that inflation could come back. Basically, they want to see inflation back between 2 to 3% and stabilize there for a period of time before they even consider lifting interest rates. So look, that could be a while away, right? Now on top of that, they've doubled their bond buying. That's more positive and more positive news that we can possibly have right now. So look, the RBA extremely accommodative stance is not changing and will continue over the next few years, which is contrary to what we saw from the Australian government, which is saying that they're going to not really bring on any more physical stimulus than what they've already announced for COVID. Okay. But I don't think the market cares about that, right? What the market really cares about is monetary policy, and that's where things are at. We're looking at the Fed. We want more Fed stimulus. We want more physical stimulus in the US because they're really getting hammered with COVID over there. But locally, look, we've got cases under control. What we want is the economy to reopen, which we've done a pretty good job of it so far. We want the rest of those borders reopened, and we want internationals back. So that all sort of feeds this beast that we've got at the moment. And it's all fairly positive to me, right? That little bit of a pullback, a bit of volatility, I invite that. That created a lot of trading opportunity for us. It's been fantastic. But the backdrop hasn't changed. Accommodative central banks, plenty of stimulus to come. Vaccines on their way. Can't be complaining right now. We're in that part of the cycle where things are going to improve, right? So the market should continue to go up. Now, in talking about the vaccine rollouts continue. Nothing really new to talk about there. But something new to talk about was news that came out, I believe, overnight. That the US are going to spend $230 million with a deal with an Australian company, in fact, to build instant at-home testing. Okay, and they believe they'll be able to roll this out at some point this year. So that's huge, right? That's huge for the travel industry as well. If you really sit back and think about it, if they can get instant testing done properly, that they can do that on the spot within 15 minutes, well, I think we might be able to loosen up our travel restrictions a little bit more, right? So anything that leads to people moving around again is going to be pro travel stocks and energy stocks. They're sort of the first to recover straight away on the back of positive news like this. We did see movements up in energy and travel today. Keep an eye on that space this week. It could be a good one, right? So just keep an eye, use your technicals for entry, but this type of news is positive for those areas. Okay, so reporting is probably the other thing worthwhile to mention right now. US reporting has been pretty damn good so far, all beating expectations. As you know the game, guys, if you listen to us often and talk to us often, they always drop expectations, and we know expectations because of COVID were dropped quite a bit, and then they beat those expectations and the shares keep going up. So that's definitely the case again here. You know, a lot of companies came out with lower guidance through last year, and now we're seeing those guidances bet, right? So look, that's all positive. Okay, it is positive equity markets, and we do expect the markets to keep going up on the back of this. Tonight though, you've got a couple of big names. You've got Amazon and Google. Okay, they're the ones to watch. At the end of the day, that will move the tech sector quite a bit depending on whether they beat or miss. So keep an eye on that tonight. I think traders' focus will be back on reporting now, with big names like that reporting, rather than, you know, looking at things like Gamestop. Our reporting season really kicks off in a big way next week, so we'll talk about that in a bit more detail on next Tuesday's market update. But for now, that's probably really it from me, guys. Okay, all in all, everything in the background, nothing's changed, right? What caused us to rally up to these levels after November? None of it's changed. If anything, things for me are more confirmed and a bit more positive. We expect more US stimulus. We don't know how big that stimulus package is going to be yet, but we expect more stimulus. It's being negotiated on now. The more we hear negotiation news, the more it's positive for markets. I'm seeing a lot more positives than negatives in the short term right now, that's for sure. All right, so I'll leave you with that thought. Thank you for listening in, and bye for now.